terminal. And Trish is here, of course. Trish, before we get to our special guest today, I'm just wondering, I mean, the broad dollar.
Okay, definitely a lot of safe haven buying this morning, especially, of course, Asian currencies, and then, of course, against the high yielders like the Australian and the Kiwi dollar as well. Traders are expecting this could probably continue at least into the FOMC meeting, where they're going to see what the Fed rate hike or rather Fed rate outlook expectations are. They're expecting that if the Fed does squash any chances of, because market was recently pricing in the chance of a Fed hike by year end. So if the Fed actually squashes this down, then maybe the dollar could actually come off a little bit. But traders are saying a lot of these is a lot of profit taking involved, and the World Bank's forecast was just one of the reasons why it's just giving traders an excuse to lock in profit on the stock market and as well as the currencies. They expect that this could probably last, have a good run actually for the next rest of this week at least.
Okay, Trish, let's bring in Patrick Bennett. He is Asia Forex and Rate Strategist at SocGen in Hong Kong. Patrick, I mean, we've been talking about the dollar. The Bloomberg JP Morgan Asia Dollar Index at a 5-week low. I mean, your take on the greenback?
Well, I think the dollar the dollar generally, we expect it to be strong over the next few months, certainly against the other G4 economies. Against Asia, we've seen Asian economy, or Asian currencies more particularly, have had a very tight correlation with what's been happening in equity markets. Asset markets more generally also have flattened out, are starting to reverse. We think that consolidation, that retrace is very appropriate. So the dollar looks to be on a strong footing right across the board in the near and medium term.
Patrick, Trish here. What's your outlook on the Australian dollar? We actually have a question from a viewer here who asked about what's the outlook, the immediate outlook for the next 24 to 48 hours anyway. And there are lots of talks that the Australian dollars have already priced in the global economic recovery, and and the chance the traders are now starting to roll back the pace in which RBA could be raising interest rates, and they say this could actually be weighing on the Australian dollar.
Yeah, I mean, certainly, from a global perspective, for a start, certainly the market, in general has been far too aggressive in pricing in any expectations of tightening either by the Fed or the RBA or anyone. Of the major central banks, we expect that the RBA perhaps will be the first to be hiking rates, but that's not likely before the second half of next year. The Australian economy has shown very good resilience. Quite clearly, the RBA cut aggressively, but hasn't had to cut to rates to levels that we've seen elsewhere. The economy has held up well. It has leverage to what's happening in China. That's helping at the margin and export of bulk commodities. In the next 24 to 48 hours, we expect some continuation of this retrace in the Aussie against the US dollar, perhaps down to as far as towards 76, 77 cents in the very short term. We think somewhere between 75 and 78 is going to provide good support on a 4 to 6 week horizon. We'll be looking for the Australian dollar to be outperforming other major currencies in the next 6 to 8 weeks ahead, but in the very short term we're looking for further downside.
Any particular, aside from the Australian dollar, any particular trading strategies that you can recommend over the next 1 to 2 weeks to take advantage of this sudden correction in the global risk appetite that you could be calling for on some Asian currencies perhaps, or crosses that you particularly favour at the moment?
Sure, I think the bias right now is to be long of dollars. That's selling the Australian dollar on any rally back towards say 79 or 80 cents. In Asia, or dollar Asia more particularly, the three currencies which were very leveraged to the equity strength were the Malaysian ringgit, the Philippines peso and the Korean won. We think all of those three should be the underperformers as equity markets correct. So long dollar positions against Malaysia, against Philippines and against the won are our favoured trades right now. We've already seen quite a jump in dollar won this morning. So right now we would be favouring long of dollar Malaysia.
Patrick Bennett, SocGen, thank you so much for being with us this morning.